Hey all, this is Pranav Cholat back with another FBC video. Today's video will be our second video of our real estate investing playlist, and I hope you enjoyed watching our first video, which gave you a brief introduction to real estate investing. If you haven't already, please make sure to subscribe to our channel down below and follow our Instagram at Frisco_FBC to stay updated on weekly investment strategy posts and any changes to our YouTube channel. Let's get started on today's video by talking about the types of real estate.
Today's video will be about the categories of real estate properties. There are mainly four types of real estate properties: residential, commercial, industrial, and undeveloped land. Let's start by talking about the first real estate category, which is residential real estate. Residential real estate includes single-family homes, townhomes, apartment buildings, condos, and vacation properties. Residential real estate includes both new construction and resale homes as well. First-time buyers of residential real estate frequently finance their purchase with a mortgage, which is a loan issued by a bank for the sole purpose of buying a house. The more the home is paid off, the more equity it gains. Many real estate investors purchase residential properties sometimes as places for them to live or as investment properties. Real estate investors also purchase residential properties to receive payments in the form of rental incomes from interested tenants who live there. In this way, real estate investors can earn a consistent income from their properties in addition to their ordinary income from their, regular jobs or revenues from their business. The next type of real estate is commercial real estate, also known as CRE. Commercial real estate includes shopping centers and strip malls, medical and educational buildings, hotels, restaurants, and offices. Most often, commercial real estate is leased to tenants to conduct business. Some businesses own the buildings they occupy. However, the more typical scenario is the property is leased. Usually, an investor owns the building and collects rent from each business that operates there. Some advantages of purchasing commercial real estate include that you can receive a high yield income, and commercial real estate has incredible potential to appreciate in value. However, some disadvantages to CRE include that more capital is required to directly invest. Additionally, you are subject to greater regulation and renovation costs if you are converting the use of the commercial property. The third category of real estate is industrial real estate. Industrial real estate includes warehouses, factories, power plants, logistics and distribution centers, and storage units. One of the major advantages of investing in industrial real estate is that there are higher rental incomes and yields. Another advantage of industrial real estate investments are that contracts are usually for the long term. Industrial tenants are usually willing to sign long lease contracts, up to 10 years in some cases, that provide investors with greater security than residential property leases. The next advantage associated with industrial real estate is that industrial property leases are net leases. This means the tenant pays for costs that would normally be paid by the owner. These include insurance, utilities, maintenance, and any repair costs. However, there are potential risks as well, since you could run into the risk of vacancy if businesses close down or economic conditions worsen. Additionally, industrial real estate is generally expensive to invest in and requires a large starting capital. The last category of real estate is land, which consists of undeveloped property with no buildings or structures on it. Landowners can earn money through land usage, such as for farming and agriculture purposes, or through land developments and sale of the land. Many investors choose to buy undeveloped land and hold on to these properties. In the future, when the local market rises and the city in which you bought the land starts to develop, the value of the undeveloped land can rise as well, and you can sell it for a higher profit than when you had bought it. Other investors purchase undeveloped land to build residential, commercial, or industrial properties, which they then lease off to tenants interested in purchasing. Purchasing a plot of land in a city that is prone to rapid development in the future can allow you to receive high investment returns. These are the four main real estate properties that investors invest in or purchase. I hope you got a good understanding of the different categories of real estate and the advantages and disadvantages of each type. This is the video review and feedback Google form QR code. If you could take 2 minutes to fill out this form, it would really help us with improving our channel and making sure our videos are informative and interesting. Thank you again for watching this video on the FPC YouTube channel. If you felt this video was helpful, make sure to leave a like and subscribe to this channel down below. Leave any questions in the feedback Google Form QR code or DM us your questions on Instagram if you have anything you would like to ask us, and we will get to you as soon as possible. Thanks again, and hope to see you in the next one.